How would you invest £1,000? We get asked this a lot. Should you invest in exchange-traded funds, equity funds, stocks and shares, peer-to-peer lending, property, gold, and how much should you hold in reserve in cash?
In today's video, we're going to look at some of the best ways to invest £1,000, including what we would do. Let's check it out.
Welcome to MoneyUnshackled.com, the investment channel and website that sets you and your finances free. This is Andy, I'm Ben, and if you like what we say, please hit the like button and click subscribe. Let's get into it.
There are a lot of options available to you to invest £1,000, but if you only have £1,000, then you need to make sure that your money is accessible in the form of an emergency fund. Safety first. The only truly liquid asset is cash. We're saying that you should have an emergency fund of cash saved in a bank to fight financial fires with, and if you only have £1,000 in the world, a cash account would be the place to start.
Unfortunately, one of the main rules of investing is that liquidity is highest when returns are lowest. However, some banks offer decent interest rates on regular saving accounts, even in this post-crash era. Our top pick is First Direct, rated great by 90% of its customers, who give you £100 when you switch to them and offer a 5% regular savings rate. You would have to drip feed your money into the account over the course of 1 year to get this return.
Stock market. £1,000 is more than enough to invest in stocks, ETFs and funds. Many platforms, including AJ Bell, allow you to invest from as little as £25 a month. This is one of our favourite all-purpose platforms, with amongst the best fees for small pot sizes.
Shares. So, you can buy shares with £1,000, but should you? Unless you are just practicing and don't mind losing money, then avoid buying shares at such low amounts. We've said elsewhere that the smallest pot size to buy a portfolio of purely shares with is more around £6,000 than £1,000.
The problem of only buying £1,000 worth of shares is that you are unlikely to be diversified enough. Due to crippling trading fees, we would spend at least £1,000 on each stock to minimise the effect of trading. So it's almost like you are gambling rather than investing, as you would only hold one card in your hand. Maybe it does well, maybe it doesn't. However, some relatively new free platforms get around most of these fees, making it more possible to invest with smaller amounts. Platforms such as Trading 212 and Freetrade, but these come with their own limitations.
Exchange traded funds. ETFs are amazing because they track stock market indices without the need for expensive fund managers. They can be very cheap and can be highly diversified. One great place to buy ETFs is on the Vanguard platform. Their FTSE 100 and S&P 500 ETFs are very cheap and track the market almost perfectly. Two of our all-time favourite investment products.
Funds. Managed funds are certainly respectable when it comes to investing your £1,000. They are often well diversified across companies, sectors and geographies. The problem with managed funds is the management fee. These can be very damaging over the long term to your investment returns. However, on the odd occasion, these might be worth paying.
And even then, not all funds are expensive. Vanguard also offer funds, including funds of funds. Their life strategy funds are collections of other funds and ETFs in one package, a one-stop shop for access to a significant chunk of the world markets in one ultra-diversified investment. The fees are ridiculously low too, which we love. If we were starting out fresh investing in the stock market, this would be the first place we would put our money. Check out our fees and taxes video linked in the description below for a full worked example of how fees can destroy your wealth. So how can we invest and diversify in the stock market with limited knowledge?
Robo Platforms. Do you want to invest your wealth without having to think too hard, with minimal fees and some investment advice thrown in? Then try a Robo investment platform. We would use an established platform like Nutmeg. With even small amounts of money, you get access to basic investment advice which otherwise would have been unaffordable, and Nutmeg will make the investment decisions for you based on how you answer their questions.
You can even get 6 months without fees if you use our referral link,
which is in the description below.
Check out the offers and cashback page on our website moneyunshackled.com. Remember, fees should be avoided at all costs.
Peer-to-peer lending. This is where we would invest our first £1,000 after we have established our emergency cash account and before we invest in the stock market.
Peer-to-peer lending is a good mix of decent returns, lower risk, and increased liquidity relative to the stock market. You lend money to people and businesses in return for an interest rate, typically around 6%.
There is a risk that some of your money could be lost to bad debt, but this is factored into the interest return, and some platforms have built in protection in an attempt to make sure that investors don't lose out. Many peer-to-peer platforms will give you incredible welcome bonuses which you can access through our referral links, which you'll find on our website on the offers and cashback page.
Here it is on moneyunshackled.com. Some platforms will give you a welcome bonus if you only have £1,000 to invest. These include Lending Works, Assetz Capital and RateSetter.
Lending Works has insurance-backed protection up to 6.5% rate of return and a £50 welcome bonus.
Assetz Capital similarly offers a £50 bonus if you use our link and a 6.25% return on their Great British Business account. And RateSetter offer £100 cashback, while their interest rate returns are a little lower, around 5.5%.
Your investment is liquid as long as some other investor is prepared to take on that loan, otherwise you may have to wait. This is why peer-to-peer investing is not a good place for an emergency fund, but if you've already got an emergency fund established, then this is a great place to start outside of the stock market.
What about commodities? Gold and oil and so on. Only buying commodities with £1,000 would not give you much diversification. You could buy some physical gold bullion, but gold doesn't pay a dividend, so we're not fans. It is a defensive asset that could be useful in a downturn, but doesn't excite us as lovers of cash flow.
What about property? Buy-to-let property with £1,000? No chance. But you can of course invest in funds that invest in commercial and residential property. But to buy an actual buy-to-let rental property with the leverage returns that come with it requires a cash outlay of £25,000 or upwards. Keep this one on the back burner for when your pot is bigger.
Question of the day, where will you be investing next? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.